Right. And I think that we try to be, almost agnostic to the markets, where we're taking an unemotional view. If our measures come off and say that we should not be in the market, we're not.
Navigating the complexities of the market, the volatility, as well as the issues of planning for a more secure and stable, confident financial future can be challenging. But that's why we turn to the guidance and perspective of an experienced, qualified professional each and every week here on Protect and Grow Chicagoland Retirement. And we turn to Chicagoland's certified financial planning practitioner. He is Tim Stearns, CFP. Tim, always appreciate the time and perspective. It is complex trying to plan for our financial future. Challenging, can be difficult, but certainly having an advisor can add a lot of value in those conversations.
I think so. And with the market volatility, we've seen a lot of people's nervousness come through. A lot of emotional trading I'm watching in the markets, not from our clients, but from a lot of other people that I'm seeing, retail traders, I'll call them, novices almost, are flying out of the market, flying back in, and they're very impetuous. And I think that's the time when you figure out that you might need, a holistic, independent financial advisor.
Well, you've got a couple resources, the investment pitfalls, 9 investment pitfalls, as well as the value of working with an advisor and the congruency between these two, how they complement each other, I think is of interest, Tim, because a lot of those pitfalls are things that advisors could hold our hands through and help us to spot and identify, avoid altogether, or navigate more successfully. And of course, that's why you are there at TJ Stearns Inc., serving proactive planning, Chicagoland area savers and investors, and making sure that they've got that plan, that protect and grow written blueprint, and that they have a resource to deal with the more challenging times and topics when planning for our financial future. Ladies and gentlemen, if you would like to get a plan put together or review your current accounts and investments and make sure that they are on track, if you'd like to form a relationship with a experienced, qualified, certified financial planning professional, pick up the phone, give Tim Stearns, CFP, a call at TJ Stearns Inc., 800-640-2256, 800-640-2256. He'd love to hear from you, talk to you, and help you address any questions or challenges that you are facing. So, Tim, I mean, just to your point there on your 9 investing pitfalls. Number one, believing that investing is a smooth ride. It is certainly not. We've seen a marked lack of smoothness here recently. And then mistake number two, trying to time the market. And it seems like that's what people are trying to do when they get in and get out, but they're not trying to time it proactively. They're reactively timing it, which is maybe even worse.
Right. And I think that we try to be, almost agnostic to the markets, where we're taking an unemotional view. If our measures come off and say that we should not be in the market, we're not. And we fight people saying, oh, what if we miss today and tomorrow? I mean, we're trying to take a long-term view. When we have plans for people that are 30 plus years, 3 months does not make a market or break it. So that's why we're trying to tell people, look long term, we're going to stay to our guns. What we had talked about in our initial meetings is still the same thing that we're doing now.
Yep. And the value of working with an advisor, Tim, is having that long-term view. Investing is 10, 15, 20 years into the future,
Yeah,
not today or next week or next month.
right.
When we work with an advisor, they should align our financial progress with more long-term goals, not what is happening today or yesterday or tomorrow in the market. An advisor has seen it many, many times, and perhaps more than an individual investor, Tim, understands the big picture.
Right. And that's what you have to, if you're looking for a momentum type advisor, that is not us. We are doing a long-term plan that, takes into account everything that's going on in your world, not just the stock market. I know that's a very, very important part of it, but it also plays into how we're looking at where we're going to take money out of, and where we're going to be maybe a little bit more aggressive and where we're not going to be aggressive. So these are we've taken that into account. We've looked at the safety measures and made sure that we thought this was coming. Peter, you and I have been talking on the radio show for how long about the volatility that's out there and that we need to be careful.
Sure.
And this is not a surprise to me. 31 years in the business, these drawbacks happen, but I think a lot of consumers have become, I don't want to say ignorant, but lazy to the fact that market's correct,
Yep.
and they do it all the time. And the good news was the last one was 2022, and the market bounced back the next year. But this has been a prolonged uh, downward trend, I'll say, and then people are scared, and the tariffs thing scares people, and that's where they're going and taking their information from different sources that make them react way too quickly. And to your point earlier, they're reacting. They weren't getting proactive about it.
And Tim, working with an independent, holistic financial advisor for personalized planning in the effort of understanding the big picture, that advisor is going to help with things in addition to that complement, but are distinctly outside the scope of investment management, right? When you are putting a plan together, you look at things like income planning, like healthcare, like legacy planning. All of those are that big picture that an advisor is going to help us to navigate and plan for, regardless of the day-to-day movement of the market.
Exactly. Looking long term, and again, I'll say it, 3 months does not make or break a market. We need to make sure that you have measures in there. The thing I would tell people out there is ask yourself, what do you have that's not correlated to the market? I think a lot of people have a huge stock portfolio that are betting on the Magnificent Seven to carry the day, and it hasn't been doing it. So where do you go? We have funds that make sure that we're looking long term, and with that comes uncorrelated assets. You're looking at commodities, annuities, tax value, sorry, cash value, life insurance. That makes things counteractive to the market being basically piss poor this year.
Yeah. Tim, we know that there has been a lot of political influence on the market. um, we have elections every 2 years in this country, change in leadership every 2 years, and change in the White House every 4 years, potentially. So, uh, as in addition to the day-to-day direction of the market, does the color of Congress or who holds the White House truly influence your day-to-day moves and planning, or do we need to look at this with a grain of salt and a long-term perspective as well?
I think you have to look at it as a long-term perspective at all times. Play the long game and make sure that you're understanding, today is not going to be indicative of the rest of your retirement. And that's why having a plan, is so important so that you can get through this crazy world that we're living in.
Well, we talk about the volatility of the market, the complexities of planning, and more on the complexities of planning, Tim. Having that comprehensive, holistic picture. I know you spend a lot of time helping clients to strategically place components for income planning. And a lot goes into just that part of it. But does the income planning, in fact, allow our investment management to remove more of the emotions and therefore be more effective?
I think it does. It's interesting you bring this up. I was at a leaders conference for advisors, and every time there was a break, these guys were running out and taking phone calls from all their panicky clients. And I wasn't receiving those. And I think that's because our clients know that we've looked long term, that, their portfolio, what is it all about? It's about being able to pay your bills. We have them set up to be strategically doing that so that the day in and day out, the market's up 100, down 100, doesn't crush their dreams. They're still able to pay their bills. That's, to have the peace of mind to do that is so great. And I saw it in action just a couple weeks ago when the market was upside down during the day, and I didn't get a single phone call, and all the guys around me were getting a lot of phone calls.
Well, Tim, I know that you value being available, you and your
Absolutely.
team, for
Yep.
clients if they do have questions or
Of
concerns.
course.
Did you feel left out at all that you weren't
No,
you weren't getting those calls?
not in those phone calls. I was good with not receiving them.
Yep.
So, but I mean, I get what you're saying. I mean, it's great to that we have a plan and that we're staying to our guns. That's all I can say is that we don't get emotional.
Again, we are talking with Tim Stearns, CFP, ladies and gentlemen, president founder of TJ Stearns Inc. That is home of the Protect and Grow written retirement blueprint. If you would like to get that Protect and Grow blueprint for yourself, your personalized plan with diversified strategies and a long-term perspective in the time horizon and planning, pick up the phone and give a call to TJ Stearns now, 800-640-2256, 800-640-2256. Tim will customize, personalize, and document that Protect and Grow written retirement blueprint for you. And Tim, for the first 10 callers to the program, you typically make an offer for your book, Solving the Modern Retirement Riddle. Now, some of the strategies in this book are best suited for those with at least $1 million saved for retirement. So do put that qualifier on the book offer. If you've got at least $1 million saved, this book is for you, absolutely essential in the strategies that it discusses that will help you face the challenges of retirement. So if you'd like that copy of Solving the Modern Retirement Riddle, as well as your plan, the Protect and Grow written retirement blueprint, pick up the phone, give a call, 800-640-2256, 800-640-2256. Tim, another value of working with an advisor, they're going to understand the risks that you'll face in retirement. Like, we only do it once. And you've got this line, I love it. You mention it often. You only get one shot at an
Yeah.
ideal retirement. Like, no do-overs, no mulligans. We want to do it right. And having the help of an experienced qualified professional who's seen it before, that's got to pay off in significant benefits.
Well, I mean, these gray hairs are real, right? I've been through a lot in 31 years. So my thought is that I can talk you off the ledge, but we don't have to talk people off the ledge anymore. If you have something that you know every month is going to be paying you whatever that looks like, whether it's an annuity or we have some great dividend funds that we do, but at the end of the day that we know that, we're using the right products and getting the bills paid, then we don't have to worry about the market being up or down. It's interesting. I was at another conference and they were talking about how they had asked people different nuances of basically an annuity without using the word annuity, and everyone loved the idea of that product. And then when they revealed that it was an annuity, they were like, "Oh my gosh, I don't like annuities." And I think that the misnomers out there that people are saying about annuities right now are coming through really well for our clients because they don't have to worry about paying their bills, whatever the market does. It be darned, they're fine. And I think that that's really important for people out there to realize there's other things besides stocks and the Magnificent Seven, and the bond alternatives that we're seeing are much better than they were years ago. And to get educated, again, that our book spells out exactly what we use as our philosophies. Give us a call. The first 10 callers with over $1 million, we'll get the book into your hands.
Solving the Modern Retirement Riddle, ladies and gentlemen, and your personalized Protect and Grow written retirement blueprint. Give a call, 800-640-2256, 800-640-2256. Tim, risks that we know, hey, market volatility. We know the market does move. It goes up and down, and yet still we seem to panic. But there are some other risks that some we do know, like inflation, don't know how to control it, right? Don't know how to address it. Taxes and the government, we know taxes are going to be an issue. And in fact, this particular risk, most of us have been taught to, well, let's just kick that can down the road and deal with it later. And then all of a sudden we're in retirement and later is here and we've got to deal with that risk. Not many people have a good, solid concept of how to address that risk. But then there are some other risks we may not even think about or may not have heard at all. Longevity risk. We hope for longevity, and then we realize that it's actually a risk financially. Sequence of returns risk. So again, an advisor such as yourself, a certified financial planning professional, has seen these things before, how they impact people, and knows how to plan accordingly.
Well, it's interesting you bring up two of the things that people don't worry about as much as they should. Number one, sequence of returns risk, which is basically retiring into a bear market, can decimate your future. That's why having a plan is important. The other one is, to your point, we want to live longer and longer. And the number one risk that people are worried about in their retirement is running out of what? And I'll ask the classrooms when I do this, and everyone in unison running out of money. And that is longevity risk. Be careful what you wish for type of thing. So if that's two of the biggest risks. One, they don't even know about sequence of returns risk. And then the second one is longevity risk, which Tom Hegna, New York Times best-selling author, talks about. That's the number one risk, is that I live one more day than the money that I have, and that's pretty scary stuff
Or
because
two, or three, or one more year, or 10 more years. The longevity multiplies all of those other risks. And we kind of live two ways, right, Tim? We blow the money early, increasing the odds of that risk, or we are so conscious of that risk that we do less than we could in retirement and don't enjoy ourselves as much.
Right. And I always tell the story about my grandma Stearns, who would always take tip money off the table that my dad had left, because she felt like my dad was tipping too much, right? And she was so frugal, and she'd only make one long distance phone call a month based on her plan. And if we missed that phone call, too bad, right? So when she passes, my dad calls me and said, "Hey, grandma left you money." And I thought she was a pauper, right? She had no money. And she had a bunch of money that she left to all of us, but she never lived her retirement, right? And on the flip side, you see people who are living frivolously and they're going to run out of money. And you got to figure out where that middle is for you. And you know how you do that? By having an actual plan. And that's what I preach to anyone who will listen to me. So if you have a plan, you won't be the extreme of my grandmother. And if you have a plan, you won't be the extreme of someone who outlives their money.
It's so important. And Tim Stearns, CFP, always emphasizes the value, the importance, the essentialness of having a plan, ladies and gentlemen. 401k, an IRA, a Roth, an investment account, those are good tools, but they do not constitute a plan, a blueprint. You've got to bring those all together. And if you were building a house, would you expect somebody to come to you with a blueprint or just a hammer? The hammer is probably important. It is an important tool, like your 401k or your IRA, but does not constitute a blueprint where all these things are brought together. And that is specifically discussed in Tim's book, Solving the Modern Retirement Riddle. If you would like a copy of that book, be one of the first 10 callers. If you've got over $1 million, this book is for you. And of course, Tim does offer for listeners to this program to personalize, to customize, to design and document your map, your blueprint, the Protect and Grow blueprint for your financial and retirement future. All you need to do, pick up the phone, give a call, 800-640-2256. That's 800-640-2256. Tim, I also like specifically with you, you're not a square peg, round hole kind of advisor. And there are advisors out there who may only have access to one tool or one avenue, and sort of have blinders on to the rest of the financial world. Like you mentioned, the attitude about annuities. You've got access to annuities. Some
Sure.
advisors only have access to annuities, and that may be why sometimes there's this prevailing attitude about them. Some advisors don't have access to them at all, and that may be another part. You've got access to the universe, the spectrum of the financial world. That is a value of a comprehensive, holistic advisor.
That's why I like being independent, right? I can do things that a lot of other, quote unquote advisors can't do. I spoke to a client the other day who had another advisor, and we put her on the phone, and she said, "Oh, I don't deal with life insurance because that's not my thing." and she holds herself out as a fiduciary. Well, a fiduciary sees the whole landscape. I mean, I was a stockbroker, and so everything was, I was the proverbial carpenter, right? Everything was a nail, and I had my hammer, and that's how I went to work. Now being a certified financial planning practitioner for the last 30 years, I've always, I'm glad that I went and saw the full landscape so that I can help people in every area that they have. We are certified with Social Security, Medicare, and how all those things can come together to do the Protect and Grow blueprint is really neat. And you see people's eyes light up that they are able to retire and they are able to retire with confidence. And I think that's so important because if I was going into retirement knowing I only have one shot at it, I'd want to measure about 30 times and then, cut once and have a great plan that's dynamic and moves with me and my family.
Yeah. And again, ladies and gentlemen, if you would like such a plan, the blueprint, Tim Stearns, CFP, and his team at TJ Stearns Inc. believe so strongly that everyone should have a plan that they offer to put that together for you, no cost, no obligation. The Protect and Grow written retirement blueprint. Give a call, 800-640-2256, 800-640-2256. Tim, it's not just stocks and mutual funds either. ETFs, bonds, bond funds, structured notes, annuities, tax advantage, strategic accounts. There is a variety of tools to choose from. And part of the value of working with an advisor, not only having access to all of those tools, but understanding what role they play in a true asset allocation. A lot of people have the kind of old school thinking asset allocation of just stocks and bonds or mutual funds and bonds or bond funds. It is not, that does not comprise or a comprehensive plan.
No, it does not. It screams that you are one dimensional, and it screams also that when these markets are volatile, you're really frightened and maybe not sleeping well at night. And the big thing that we're going to look at is the big picture and have the ideas that, we have other vehicles in there that shore up when the markets are getting nuts and make people sleep better. And I think that's what it's all about. And we are also going to look at the full landscape. A lot of these people are focusing only on, what was my return last year? Well, if you can't pay your bills, that's what makes me nervous. You want to make sure that it's great that you had 20 something percent last year, but you were down 40 this year. Those are not things I want to hear about. Only your wins, are not the things that you are going to carry you through on a retirement. And we're looking at 30 plus years nowadays, and that's what's so important.
Yeah, you don't plan on the good times always being there and consistent. The plan where the metal is going to be tested is during the bad times, the challenging times. And that's why, Tim, having an experienced, qualified, professional resource and an advisor, it may feel a little bit like a pessimist during the conversations and the planning process. Well, what if this goes wrong? Well, what if that goes wrong? Well, did you know that this often fails, right? But that's what's going to give us confidence once we leave that meeting and go out into the world to live life.
Right. And I'm with you is having that plan and looking long term. I spoke to someone the other day and they said, oh, my little play money, it's come back so much faster, because I'm still in those stocks and I never sold. But we didn't go down the ladder all the way down into the basement to come back up to where they were. You know what I mean? Breaking even. So that's the important thing to me is that, I want, you know, playing I love baseball. So, like playing the small ball, right? Getting the guy to first, bunting him over to second, that type of thing. I'm not trying to hit home runs with some crypto that I heard about on the radio, with my clients' money. We're trying to do safe things here, and retain the gains that we've made, and then also make sure that every day they're able to pay their bills.
And then the ongoing coaching, holding hands, staying focused on the
Yep.
long-term goals despite volatility, staying invested and not missing those best days in the market. Aim for consistency in our results, all of those things, Tim. And then just making 1% improvements on a regular basis can make a large difference over the long-term time horizon of our financial future.
Yeah, moving the dial little by little to make things better is the way we try to do, not drastic changes. I find people when they do finally retire, they don't want a lot of drastic change. They might while they're working and working up to that retirement, but after that, they want to be on easy street. Like those commercials, you press the easy, remember those button? That's what they want. They don't want you to call them and tell them, you lost 20% and now we're back up, 20%. So that's still not breaking even. So we want to just smooth out those ruts and make sure that things are good to pay the bills.
Well, Tim, good program today talking about the pitfalls that investors may fall into, may be unaware of, may catch them off guard, that can derail their financial future, and then the value of working with an experienced, qualified professional, a comprehensive, holistic investment and financial advisor. And I know that you put a lot of emphasis on the need for a plan, that you believe so strongly in this that you make the offer to put together, to document, to put in writing a personalized plan, strategies moving forward for proactive savers and investors throughout and beyond the Chicagoland area. Many have taken advantage of this opportunity and have more financial confidence, but many more need to. So if you've got questions, ladies and gentlemen, pick up the phone, give Tim Stearns, CFP, a call, 800-640-2256, 800-640-2256. And along with that, if you've got more than $1 million saved, the book, Solving the Modern Retirement Riddle, absolutely for you. And the offer stands for the first 10 callers to the program who meet that qualification. You can also get a copy of that book, Solving the Modern Retirement Riddle. Tim, we always appreciate the guidance, the insight and expertise that you provide.
Thanks, Peter. Thanks for having me.
Tune into Chicagoland certified financial planner Tim Stearns' full radio program and visit TjStearns.com for many valuable resources, including other great episodes of Chicagoland Retirement. Be sure to subscribe.
Investment advisory services offered through Cornerstone Securities, LLC. The information presented on this program is provided for informational purposes only without warranty of accuracy, completeness, or suitability for particular purpose. This program is not intended to be and does not constitute financial, investment, legal, or tax advice. This information is general in nature, not specific enough to be construed as advice. You should not make any decision based on the information presented on this program without independent consultation with an appropriately licensed professional or competent advisor. Investment in securities or the market involves a potential risk for loss of principal. Trading, therefore, may not be suitable for all listeners. Annuity guarantees are based solely on the financial strength and claims-paying ability of the issuing company. Withdrawals of growth from annuities may be taxable as ordinary income in the year it is taken. Individuals should review contracts for specific details of the product's features and costs.